Hello, here is Kramer's Corner with a technical update on global equities. In this New Year's first edition, it will be the Magnificent Seven, as we call them, and we will start off with Alphabet. And here's this Alphabet C share that we are looking at. Alphabet got rejected at 143.85. Some resistance there, as you can see. A little bit of a setback. However, as you can see here on the daily chart, it is still in an uptrend. There is no divergence on the RSI, indicating that we could move higher in coming weeks. As long as we stay above this rising trend line here, there is more upside potential for Alphabet. And if it does close above 143.85, well, then there is potential up to 150, 152, potentially higher, meaning a potential new all-time high. Moving on to Amazon, that is also in an uptrend, but it is struggling a little bit. As you can see here, if we start with the weekly chart, yes, we are in an uptrend as we can see here, but there is some divergence here on the RSI. You can see this peak here is lower than this one, indicating that the uptrend is weakening. However, as you can see, we still have the 55 moving average coming up, and we also have the 200. We are well above the 200 weekly moving average, indicating the underlying medium to longer term trend in Amazon is on the rise. Looking at the daily chart, zooming in a little bit, we're still above this lower rising trend line here. These rising trend lines and falling trend lines, they're not the strongest ones. They are merely just guidelines, but still they can guide us a little bit. If we do break it below this rising trend line here, well, then we are likely to see Amazon moving to 143, 142, 81 support level, where we also have the 55 moving average coming up, and we have the 100, and we are also above the cloud. However, there's no divergence here on the RSI. We can actually slightly rising trend line here, indicating that we will see Amazon moving higher in coming weeks. Moving on to Apple. Apple got hit the other day with a massive sell-off. Actually, it was Tuesday, following through a little bit yesterday. So it's actually gapped lower, as you can see here. It didn't, and this came after the Apple share couldn't follow through after actually performing a new all-time high, both in terms of share price, but also in terms of share closing price, but it couldn't follow through. So we do see some weakness, and as you can see here on the daily chart, which is quite interesting, it has actually been indicating divergence for quite some time. So that means the uptrend here was weakening, and now we got this exhaustive pattern, top and reversal like pattern up here. RSI is below 40, meaning we are now in a bearish sentiment or negative sentiment, indicating we could see lower levels in Apple share. If it does close below 182.90, well, then there could be further selling pressure, testing the 200 moving average, possibly be dipping lower in coming weeks. For this scenario to change, and for this picture to change, and Apple to resume uptrend, it needs to close this gap area here, and it also needs to close above 194.66. Otherwise, the bearish picture is still very much in play.Moving on to mid platforms, or formerly known as Facebook, also got rejected here at some strong resistance area at 353.65. It spiked up a little bit, as we can see here on the weekly chart, but as you can also see, massive divergence on the RSI on the weekly. So the uptrend here has been weakening more and more, and indicating that a top of reversal pattern also came in place here. You can see bullish move up, then a doji here, and then a bearish candle. The week is not gone yet, so let's see where we end this week. It depends, but if it is to become a bearish week for Meta, then we have a top and reversal in the form and an evening doji pattern. That is a top reversal. So let's see here the next couple of days if we can actually move back up and take out the peak here at 361.90. If we do that, well, then we will see Meta moving back towards all-time highs just below 400. Otherwise, we could see weakness being hit in Meta, and correction could continue down to at least 325, and then it will be really interesting. If we also look at the support here, 313.66, well, that is a crucial level for Meta also on the medium term. Moving on to Microsoft, that has been trading sideways the past few weeks, actually since mid-December more or less, or early December actually, and the uptrend that has been really strong in Q3 and Q4 has been stalling. As you can see here, divergence on the weekly RSI indicating that maybe this is it. If we're looking at the daily chart, then we have to zoom in and look at that to see we have a triangle-like or symmetrical triangle-like pattern here. It's not the most perfect one, but nevertheless it can give an indication of the breakout direction. If we do break up to the upside, well, then we are likely to see a Microsoft towards new all-time highs. If it does break out to the downside, and especially if it does close below 362.90, well, then we can have a larger correction that could take Microsoft down to 350, 340 level on the short term. Another one of the tech darlings has been Nvidia for a very long time. It has a massive rally for the better part of 2023, a little bit of trouble at the end, and now it's really struggling to move higher. Several times now it has been rejected at the previous all-time highs level here around 502.60, spiked a little bit higher, but it couldn't really follow through. And if we're zooming in here on the daily chart, we can see around 505.48, which is the peak here from November. It got rejected right there, couldn't really move up to test it here a few days ago. And if Nvidia does close below 450, it will be below the cloud, it will be below the 55 and the 100 moving average, and then it could actually be hit by a sell-off down to around 400, 401, where the 200 moving average, however, will give some support. What you should also keep an eye on, and what is interesting, is there's actually been divergence on the RSI for quite some time, and if it does close below 40, well, then we are very likely to get a correction down to around 400, possibly lower. If it does move back above 60, well, then look out for a break to newer highs. Finally, let's have a look at Tesla. Tesla, quite volatile lately, and just at the bigger picture here, we can see that it actually did spike up here last week or the week before New Year's, between Christmas and New Year. It did spike above the upper falling trend line, but failed to close the week above. We are now back below. RSI is still in a positive sentiment, hasn't closed below 40, but look at what's happening on the daily chart, and that is actually quite interesting. It did form a bearish engulfing pattern, and a bearish engulfing candle is an indication of a top and reversal, where you can see sellers, they took control right from the beginning. Buyers tried to open higher, but sellers took control, sold out through the session here on one of the last trading days of last year. It was 28th of December actually. Following through into the new year, back below the upper falling trend line, back below 242.68, testing the cloud area. You can see this shaded area here. That is key the next couple of days. If it does bounce back above the falling trend line and back above 242.68, we could see a push to cancel this top of reversal pattern. But if sellers keep in control, if they stay in control and close Tesla below 225.95, as indicated by this line here, well, then there are more troubles ahead for Tesla, with a potential move down to 195 level in coming weeks. So that's really interesting. And if that picture or this scenario plays out, then there could be much more trouble ahead for Tesla in 2024. All right, that's all for today. Thank you very much for listening. Have a nice day and happy trading.